Good morning, everyone. Welcome to the 2024 Spring Meetings Governor Talk Series. My name is Krishna Srinivasan. I'm the Director of the Asia Pacific Department of the IMF. Today, I'm extremely delighted to welcome back a very dear friend, Governor Chung Yong-ri of the Bank of Korea. We'll discuss Bank of Korea's experience combating inflation and the lessons we have learned from this experience. So, Governor Ri, thank you so much for being here. It's a pleasure to have you back at the fund.
Are you continuing to call me Governor Ri?
Yes. In public, it'll be Governor Ri. Okay.
Please don't do it. And
Yeah.
I think I'm very glad to see my old friends and colleagues here. I was feeling I'm coming back to home. So I'm also thanks very much for all the education and knowledge that you have given to me while I'm here. Actually, at the same time, I'm being paid well rather than paying for the education. So I'm very glad to be back.
Thank you. So let me start off with one big picture question. Over the last few years, we've seen a significant amount of elevated uncertainty in the global economy. In that context, central banks around the world have had trouble conveying the future course of monetary policy. So what's been the experience of your experience, the Bank of Korea's experience in providing forward guidance to market participants? And what kind of communication tools could central banks use to do a better job of communicating the future course of monetary policy?
Yeah, actually, it's a hot topic given that Bernanke report in Bank of England, right? Yeah. So how central bank has to do the forward guidance, and our situation is a little bit different from what advanced economists are discussing regarding the forward guidance. Now the Bank of England and many advanced economies is reviewing the effectiveness of the forward guidance after the global financial crisis, so-called unconventional forward guidance, and then they are reviewing many technical aspects of what should be the forward guidance down the road. On the other hand, Korea is an exception in the sense that our monetary policy board has kept this so-called strategic ambiguity as the most important element for our communication. So before I become a governor, I think that we are in some sense the exception in the sense that our monetary board revealed very little about what will be the future course of interest rate from our monetary policy committee decision. So what I did in the last 2 years, I tried to open more information and then also reveal how the monetary policy committee members actually think about the future monetary policy courses. So we try to introduce so-called K dot plot, which basically what we are doing is we are trying to explain what is the opinion of our monetary policy committee members' view on the next 3 months interest rate movement. And I intentionally decide not to reveal my view, because if I include my view too, then probably the parliamentarians and many press are just focus on which dot is mine. So, but instead we are trying to now reveal what will be the course of interest rate for the next 3 months. We are currently thinking about whether we're going to extend the horizon from 3 months to the more 1 year or even longer, and we are under discussion. As a step toward it, and we haven't made a decision yet, but we decide to publish our quarterly economic forecast. So far, we published our biannual estimate, but now from this May, I think from the second half, we will publish the quarterly forecast numbers, and we are now reviewing our forward guidance, principles, and probably we can come up with something from the next year. But I believe that as we are the other extreme, I personally see there is some merit of revealing more information to the public. And then also I believe that that will be very helpful to enhance our capacities too, without revealing our information, how we can judge whether we are right or not. So in some sense that we are trying the other directions than other advanced economies.
So in the case of the Fed, you've seen a disconnect between how markets read whatever comes out of the Fed communication. There's a disconnect. It has narrowed, more recently. Have you seen that in the case of Korea? I mean, what you put out, how you see the thing, and how markets are interpreting that?
We do some empirical studies. It shows that our communication has stabilized, in some sense anchored the market expectation, but that probably the period that we have done has been doing this is 1.5 years is too short to have a very concrete evidence. Having said that, I think that basically, I have to. What is most important is that I have to talk to the market. The forecast that we are giving is not unconditional. So we have to be very clear about what is basic assumptions behind this forecast. And so far, whenever we change our forecast, like other advanced economies, media and people criticize, we make a mistake. So and every time when I communicate with the market, I emphasize at this moment that this forecast will be probably changed. So it's not a mistake. It will be changed depending on the assumption. So probably this kind of some period of communication and the learning each other will be very essential. So at this moment, what I'm trying to do as a part of communication is that whatever the forecast we make, this is conditional on certain assumptions. So whenever I release it, I'm emphasizing this assumption part so that people can actually, when the basic assumption changes, so they can prepare and interpret and they can guess what will be our policy action later on. So through this exchange, I think we can have a better effective forward guidance.
Very good. So one other question, in the context of dealing with inflation, central banks around the world, including Korea, have had to contend with financial vulnerabilities, right? How have these, I mean, what's been your experience in Korea? How have these manifested in Korea? And what actions have you taken to address these vulnerabilities while also dealing with inflation?
I think that issue became very clear around the end of 2022. We started to increase our interest rate rapidly after Ukraine and Russia-Ukraine war escalated, and our inflation peaked around 6.3% in July 2022, and we so-called do some big steps, the 50 BP increase our interest rate for the first time in our history. People say, oh, it's still a small amount compared to the US 75 BPs, but given the proportion of a floating rate loan is much higher, 50 BP in Korean rate hike has an equivalent or even larger impact on our financial market, compared with 75 BPs of the United States. And with this rapid increase of the interest rate, people start to worry about its impact on real estate market. As you know, given the very low interest environment, the leverage of the household sector increased quite a lot, even though. So there is a lot of concern. And then one small political mistake of the one local province, which defaulted the real estate project financing bond, triggered the pessimistic view on the investors, and there's a run. And then that's around the end of 2022. And that caused domestic interest rate in domestic financial market skyrocketed. So in some sense, we increased interest rate, but the market rate is far higher than we hoped for. So we have to do something. So in some sense, we rely on the separation principle. So we approach the financial stability different from the monetary policy inflation problems. So we provide liquidity to the institutions like security companies and some non-bank financial institution who has a high exposure to the real estate bond. So definitely we provide liquidity based on their collaterals. We basically extend liquidity by taking the eligible collaterals, but it was a little bit difficult to communicate with the market that because at the same time we are tightening our interest rate, we have to provide liquidity to certain portion of the financial markets. But I think this separation principle works very well on the U.S. Silicon Valley Bank case too. So that was a kind of one issue. But at the same time, I think as you mentioned, what lessons we can learn from our experience, I think there are a few things. But in my mind, first important thing is we have to review how effective macroprudential policies to prevent these things ex ante. And Korea is a good example that the macroprudential policy didn't work as it's supposed to do ex ante. So we have to probably review whether there is a way to make it more effective. Second, like as I mentioned, under the separation principle, providing some kind of standing facility to provide liquidity to the affected institutions. That's very important. In our cases, we expand our eligible collaterals so that we can provide more liquidity to them. And the third thing is need to have a very solid framework for the ex post restructuring. So for our cases, our project financing issue, in my opinion, is manageable. And then we are on the restructuring this project financing exposures, but it will take time.
Right.
And then it's not just the central bank act, but our regulators and government is relying on so-called lending institutions consortium agreement. This is not an in-court restructuring, but it's a kind of out-of-court restructuring plan based on the voluntary agreement between the lenders and borrowers. But definitely government provide more incentive for them to reach an agreement. And in some sense, we become an expert after the 1997 Asian financial crisis and the credit card problems in the early 2000s. In 2008 global financial crisis, Korea became one of the experts into the restructuring vehicles. Yeah. And I find that this lending institutions voluntary consortium agreement is quite effective to address this restructuring issue so that we can have orderly restructuring. So I hope to export this kind of idea to China so that China can address some of the real estate problems.
Thank you. One last question before I open the floor for questions. So the fight against inflation is in the last mile, as I would say. Yeah. That could be the hardest part. And central banks are thinking about when to shift or pivot, right? This goes to the issue of how do you see the neutral interest rates in thing. What are your views from a Korean perspective on the neutral interest rates in Korea? And any guidance on how you see the considerations which will lead to a pivoting in Bank of Korea's monetary policy going forward?
You know that my background is academic, so I love to have this kind of discussion. So R-star. So I personally very much interested in this issue. But if you ask a question whether R-star is how effective it is to design monetary policy, and then as you mentioned, whether it can be a really one criteria which determines when to pivot the monetary policy. I have to confess that I'm interested in econometrically how R-star is derived, but the standard errors, whatever the model you have, is quite big.
Quite big,
so
yeah.
Big. So it's very useful concept. I think it's a good mileage that we have to rely on, but whether we can rely on mostly on those things, I doubt, because the range of the numbers is too big to just rely on it. So together with that, you see financial condition index, you have to see how the inflation move on. So all other qualitative and the quantitative evidence has to be combined. But having said that, as for the R-star issue in case of Korea, actually we're going to have a international conference at the end of May on this topic, and the IMF is also one of the invitees. So we want to discuss academically about this R-star issue. But major interest that we are having is what should be the framework to estimate R-star in a global economy. So basically, for example, like if I just look at the domestic saving investment, trend, given our aging trend, our demographic trend, I believe that and the lower potential growth rate due to the aging, I believe that our R-star has to have a downward trend. It's going down. But on the other hand, globally now, as Larry mentioned, given the fiscal deficit and the more investment need for the green growth or other things, R-star will go up. So my question is that if I believe that domestic R-star will be more likely to go down, on the other hand, the global R-star will go up. How can I, think about how this our movement will go up? Should I say that if I allow the exchange rate flexibility, then in some sense domestic interest rate is independent from the falling interest rates, so it should be, I just focus on domestic R-star. But I'm not so clear. And then also, so it's an academic issue. So
let's hear the operational perspective.
Yeah. Operation perspective, the pivot timing is a current issue, actually. It's tricky because I know there's a lot of media here, so probably have to be careful. But look, I thought that after the middle of the last year, when U.S. hinted that the U.S. start to give a sign of pivot signals, things has much improved, that our exchange rate market stabilized, and many central banks, including ECB, is ready to move. So I thought this year will be the year of decoupling, and Korea. I think that given the pivot will come soon, I thought that we can have a more independent monetary policy from the U.S. policy, monetary policy, and thought that we may be able to do even start to thinking about cutting the rate sometime. The two issues happened after that, and actually we had a monetary policy committee meeting last week. We decided to hold our rate now for 10 consecutive times. Right. The major reason is that unlike Europe and the United States, our core inflation is higher than, our headline inflation is higher than core. So currently our headline inflation remains at 3.1% for last 2 to 3 months. On the other hand, our core inflation shows definitely is moderating to our target, and currently core inflation is 2.4. So our inflation is more affected by the supply shock, so oil prices, and then recently the agricultural products, because partly maybe climate change. So I don't know whether it is we are actually struggling with the last mileage of the the monetary policy actions, and whether I'm pretty sure, given that our economic conditions, our core inflation will go down to around 2% by the end of the year. But whether our headline inflation will go down soon, that I need a little bit more information. So I mentioned that we probably haven't turned on the turning signal yet, but we'd like to see more evidence that our CPI inflation is going down as we expected. You may ask why you talk about headline inflation only. Core may be more important given supply shock, but our inflation expectation is much strongly affected by the headline inflation, so we have to look at it. And then the other second issue is that now U.S. actually give a signal that probably there is like a pushback of the expectation that U.S. cut will come soon, and that caused a lot of headwind and the pressure to our exchange rate. And our exchange rate is affected not only for this change of expectation of the U.S. monetary policy, but our exchange rate is affected by the geopolitical tension, and then also affected by our big neighbors, yen and the yuan. It has a lot under pressure. So in various reasons, I believe that in the last couple of weeks, our exchange rate was affected very much. I feel like a little bit it deviates from what could be justified by market fundamentals. So, but that is why we are adopting the IMF's integrated policy framework. So we are also relying on the FX intervention to smooth out this volatility, and we have resources and also tools to do so. So it's a little bit tricky and some sensitive time for so many uncertainties happening. So we probably have to see how this is going to evolve to make sure when we to pivot or not.
So challenging times to be a governor, clearly. So at this point, I'm going to open up the floor for questions. Please raise your hand, introduce yourself, and yes, and be nice to the governor. He's a dear friend. So.
Do I need a microphone? Or?
Yes, it's coming.
Hi, Governor Lee. My name is Matthew Kendrick. I'm with G0 Media. You just spoke a little bit about geopolitical sort of tensions with China. I was wondering if you could explain more about how you're thinking of monetary policy with the increasing risk, or if you see any risk coming from Beijing's political and geopolitical positions presently.
Yeah. Okay, I knew that this is not going to be easy. So, look, for Korea's exposure to China is big. So I don't think that what currently we are affecting from China is not simply because of the geopolitical risk. If you look at the China, for example, like if I compare, now the U.S. become again the largest export destination from Korea. About 18% of our exports now going to U.S. China used to be 25%, with a wide margin, but our export to China is dropped to around 17% because now the second. Is it mostly due to the geopolitical tension? I don't think so. I think we have been complacent for a long time that China's technology development can catch up Korea, like we caught up Japan's technology primacy in the last time. So in some sense, for the many intermediate good industries, irrespective of geopolitical tension, China become very, very much competitive. So we have to move up to the ladder in order to maintain our competitiveness. But I'm very sorry, but Korean's industry and has been so complex in the last 15 years. Now we are having a wake-up calls. So that's one thing. Definitely geopolitical risk is one issue, but this geopolitical risk is between China and Korea. It is only affecting the very high technology sector rather than overall sector. So there's some segment of our trade. I don't know whether this can be an answer. Yeah.
Thank you. Yes.
Hi, James Meg from Bloomberg News. You've already said, since you've been here, that the BOK will be willing to take action on FX rates if necessary. And obviously the Japanese are in the same situation as you. There's a lot of pressure on the yuan. Do you see the biggest factor in setting interest rates and also FX rates now is the rate differential with the Fed, or is it still the domestic factors you look at when you are setting interest rates policy and also thinking about the currency? Thank you.
I think this current situation is different from what has happened in the middle of 2022, when U.S. actually start to having 4 consecutive giant steps. At the time, the exchange rate around the world depreciate very rapidly because of strong dollar. But at the time, it's not just the interest rate differential, but the expectation that U.S. will continue to increase rate affect the exchange rate movement more. I think this time, a little bit different. I don't know, but for sure. But now, I think the general understanding of the market is that is about the delay of the U.S. rate cut rather than reversing it back to the rate hike, right? With this change, I think the issue of uncertainty is how long U.S. will maintain the interest rate and when they will start to cut. So in that sense, I think the impact of exchange rate in emerging market exchange rate on U.S. monetary policy change stance, I hope you see will be transitory compared with 1.5 years ago. And then once the market adjusts to the new U.S. stance, I think that the pressure on the exchange rate will disappear, and then we can focus more on the domestic issues, which the CPI issue that I just mentioned.
Right.
But another uncertainty is definitely not only the U.S. policy. Another uncertainty is possible escalation of the Iran, Israel, and Middle East risk. That's a different issue, and depending on whether you are oil importers or not, the impact will be quite different. What we are concerned, and when I say that why I feel our exchange rate is a little bit deviate from the market fundamentals is the last 2 weeks. The Japanese yen and the Chinese yuan is very much under pressure, and then Korean won was used as a like we call this kind of hedging instrument for Chinese yuan and the Japanese yen. So in that sense, we are affected more. So that's what I meant.
Thank you. Any questions from non-media? Any more questions? So I had one more question. So, despite interest rates rising and being high, we have seen private debt rising across many countries in Asia and elsewhere. And you've seen that in Korea too. So what has been the central bank's response to that, and how do you see that as a risk going forward?
That is the main reason why I mentioned that we have to review the effectiveness of macroprudential policies. In case of Korea, definitely our household debt level over GDP is higher than others. It's a concern. But given that our household debt is mostly for mortgage payment, and then given our low, kind of collateral values of the loan to value ratio, and then our tight regulation on mortgages, I don't think this high household debt issue is for financial stability issue.
It's not a systemic risk.
It's more. It's not a systemic. The issue is for the high debt makeup household hard to spend on consumption. So it's more like a potential growth rate issue. But having said that, definitely we need to reduce the household debt leverage ratios, and it cannot be done in very short period of time. Unlike corporate debt, which is relatively easier to restructuring by just making write-off, household debt is very hard because moral hazard problem. So it has to be gradually reduced, and so that cannot be done alone by monetary policy. That is why I think that the strong macroprudential policy is necessary. Another private sector debt is corporate debt.
Yeah.
And now many people is pointing out that corporate debt in Korea is also going up in terms of GDP, which is true. But on the other hand, if you look at the corporate debt over their capital, the leverage ratio has not increased. So in some sense, I feel like some part of corporate debt is also related with the real estate that we have to probably.
How big is the problem? Commercial real estate, is that a big issue?
No, actually, you can say vacancy rate in Korea in main Seoul almost full. Zero. I mean, because unlike the U.S. and Europe, Korea hasn't closed lockdown during COVID period. So people never walk away from home for a long time. So our office building is quite fully occupied. So commercial real estate, yes, commercial real estate problem is a problem to us because several of our financial institutions invest in foreign commercial real estate. It's not systemic, but they may probably make some loss, but it's a very small amount. So commercial real estate is not a big issue. But the corporate debt has increased quite significantly. But some of it related with the real estate issues, but the lion's share is related with the new investment in semiconductor. And so in some sense, for the growth of our country, we need a corporate debt increase. And we are actually focusing on, we find that their capital is also increased. So it's different from the household debt. In terms of GDP, corporate debt is increasing, but in terms of the capital, it hasn't. So yeah, there is a risk, but I think it's not a bad thing to having a more for corporate investment. To speak frankly, what I'm worried about is more how our public debt will change. So far, I think Korea's public debt over GDP ratio is 53% according to IMF statistics, which is good. But if you look at the next 20 years, because of aging, I think there's the chance that it will increase quickly is quite high. I really hope that our government, including current one and the future government, pay attention that the strengths of Korean economy, which is very, reasonably low public debt over GDP ratio. I really hope that they have a willingness to
adhere to that.
Because of aging, if they follow the so-called populist approach, just giving away for many establishment program, whatever, then our debt can increase quite rapidly. So I hope that. I think I'm very lucky that our finance ministers, two finance ministers who worked with me after I returned to Korea, both of them are very committed to have a financial, fiscal soundness. So unlike other advanced economies in the last 2 years, our government maintained very prudent fiscal policy. I really hope that this continues.
And we've spoken to that at the IMF. So,
Yes. I asked, I asked him to come and say loudly on this issue.
We said that independently of what you said. We are run out of time here. Sorry, we are run out of time. Thank you so much, Governor Rhee. It's always a
Come on,
pleasure.
don't call me that.
In public, I have to call you that.
Okay.
So thank you for being here, and it was a pleasure
Thank you.
talking to you.
Okay.
Thank you.